Hello, everyone, and welcome to the Sustainable Finance Podcast. My name is Paul Ellis, and I'm your host for these programs about developments in this fast-growing industry. Today, we're going to learn why the German federal state of Baden-Wurttemberg passed a law on sustainable investing that blacklisted US Treasury Bonds as a portfolio holding. My guest today is Arnim Emrich, head of Treasury in Baden-Wurttemberg. Emrich and his team managed 35 billion euros of capital market debt and the state's 10 billion euro sovereign fund for future pension obligations. They also launched the state's green bond program in 2021, and Emrich has authored a law on sustainable investing, defining a common standard for any state entity investing in stocks, bonds, and other financial instruments. I'll welcome Arnim in a moment. But first, I want to say a few words about our sponsor. If you're tuning in to this podcast, you already understand the crucial role finance plays in the transition to a sustainable future. With the right individuals leading the way in top companies, sustainability becomes more than just a buzzword. That's why we're excited to have Acre as our sponsor. As a world-leading sustainability search and recruitment company, Acre enables organizations to create real change by embedding and developing purpose-driven people in their teams. Visit the Acre website to learn more about their latest opportunities or to get in touch about building your perfect team. Hello, Arnim, and welcome to the Sustainable Finance Podcast.
Hello. Thanks for having me.
Yes, I'm very glad you could join us today, and I'm going to jump right in to the questions that we have. And the first one, of course, is, am I correct in saying that the exclusions of the US Treasury Bonds from the Baden-Wurttemberg portfolio is due to America's failure to ratify a number of treaties in areas including women's rights and controversial weapons? Is that the case?
Paul, I acknowledge that this question kind of brought me in your podcast, but I will answer with yes and no, because the answer is yes if you refer to the formal rules of the law. We looked for an objective measure of value alignment in the area of sovereign bonds for the issue of sustainability. So the most objective we found was to refer to international treaties referring to the sustainability issues at hand, and then looking at whether a sovereign issuer has ratified the same international treaty as Germany, and through Germany also Baden-Wurttemberg has. And the United States has not ratified a couple of international treaties for various reasons. One is biodiversity, the other is anti-person mines, the other is cluster ammunition, and in the women's rights treaty, an optional charter has not been ratified by the United States. So that there's a couple of international treaties that have been ratified by Germany and not by the United States. But at the same time, I would answer with no, because, of course, when we developed the law and when it was discussed in Parliament, it was against the backdrop of the actual portfolio holdings and the general strategy of investing so far. And in the bond sphere, our pension sovereign funds and any other entities have focused historically only on euro-denominated bonds.
I see.
So US Treasuries being issued in US dollars and coming with the exchange risk, rate risk, were not included in any of the portfolios. So on the one hand, yes, the rule would exclude the United States as an issuer. On the other hand, no, because we actually did not have to exclude any bond or sell any bond because of that, because we didn't have US Treasuries in the first place. And what's also important to note, and you will maybe come to that later, this is only regarding sovereign issuers for sovereign bonds. It does not exclude companies from the United States, corporate bonds, or stocks.
Okay, but that still leaves the door open, if you will, to sovereign issues from other parts of the world. Is that something that you and your team need to be aware of and focused on, not just limited to the United States, but let's say like from Singapore or from other countries, other sovereign issues in the Middle East or in Asia? Those things need to be considered, correct?
Certainly, and we did have some euro-denominated bonds from countries that have not ratified some treaties that now have to be sold because of the law. It's not a huge share of our portfolio, but there are some bonds that we now sell because of that.
Okay. All right. Well, thank you very much for that information. I think that will help our listeners be more clear about what the guidelines really are for your debt portfolios. Now, your regional parliament recently voted for a law that you proposed that defines minimum standards for sustainable investing. If you would, please explain the key aspects of this law for our listeners.
Yeah, maybe a small specification for the start. I have authored it as a state employee, but of course the initiative came from the political sphere and the current ruling government of the Green Party and the Conservative Party that have agreed on such a law in their coalition treaty. And it was my job and my team's job to then implement the general idea and come up with a law that specifies the political will that was formulated before. And I'm glad to kind of summarize this law for you and your listeners. On an abstract level, what the law does is really it changes the mandate for asset managers that work for us or any of the state entities that invest more than €1 million. Because so far, basically, the magic triangle was the rule that guided investing, being return, risk, and liquidity. And it's called the triangle because there's trade-offs between these three, and the asset manager and asset owner has to decide, how to manage these trade-offs. And now we basically changed this to a magic square, you might say, where there's one more corner, which is sustainability. And that is the most fundamental shift because it's very different for asset manager to optimize the magic triangle and then have a, additional criteria of sustainability, because in case of trade-offs, then return risk always wins. Or if you implement it in the mandate and it's on equal footing with return and risk, and the trade-offs have to be managed directly, and that enables to also maybe sometimes forego some return. Or expected return to reach better sustainability outcomes. Specifically, the law then breaks this down on different aspects of sustainability. And I just would want to highlight maybe three major aspects. One is climate change. And for the issue of climate change, the law stipulates decarbonization pathways. So it stipulates for the portfolio to decarbonize with respect to the scope 1, 2, and 3 greenhouse gas emissions by 7% annually on average. And this decarbonization is roughly in line with the IPCC scenarios for the 1.5 degree scenario that has been agreed upon in the Paris Agreement. The second aspect is on environmental sustainability. There is tilt or preference formulated in the law for companies that have a higher share of, I could call it green turnover. So turnover with solutions for environmental challenges. And thirdly, we have exclusions for fossil energy on the one hand, which is linked to the 1.5 degree scenario. And on the other hand, for any company that is assessed to be in significant obstruction with one of the 17 Sustainable Development Goals of the United Nations. And that includes the social aspects like health and poverty.
Okay. So now, my impression from what you've just said is that there are differences among the member states of the EU that might come into play with this kind of law related to the companies that are from those states. Mm-hmm. Is that true? Because I think what investors in America often perceive is that the EU operates as a unit, as one unit, mm-hmm. when it comes to investment strategies related to sustainability. But it sounds like there's a lot of diversity even within the EU.
Paul, you're certainly right. I would say there will be more discussion around that. In the regional parliament, really the first questions were, does this affect companies from our region? And we said from the beginning it can't be, a criterion for this kind of law whether a company in this field is active here or not. So there are companies from Baden-Württemberg that now cannot be invested in. And then, of course, you're right in terms of other EU countries. Certainly, maybe the industry structure or the type of companies you find are different from country to country, and certainly also the governance and social standards that go beyond the EU law differ between the countries, and that might have effects on whether there are more or less companies excluded from certain member states.
Okay. Well, thank you again for the clarification there. Now, a political question. Was there or is there on an ongoing basis political discussion and even opposition to a law like this, not necessarily of the kind that we're seeing here in the U.S., but within the EU political infrastructure? I'm sure that there's lots of opinions about this type of development. Is that the case?
That's certainly the case, Paul. Maybe I can start with the debate in the regional parliament, and I give you a flavor of the arguments that were coming up there, and then I can also comment a little bit on Germany and the EU level, which is even more complex, I would say.
Well, that would be very helpful. Thank you.
On a regional level, the Parliament has discussed the law, so the government proposed it. The ruling coalition, as I mentioned, Green Party and Conservative Party has proposed the law. And then the opposition discussed it with the government in parliamentary hearings. And in the end, 3 opposition parties are in the parliament. One party actually withheld the vote, but expressed positive acknowledgement of the law publicly. And 2 parties were voting against it, but for different reasons. One party is the I would say radical right party in Germany, the Alternative for Germany, which opposes climate change. So in the first place, so they don't believe in climate change, or if they do, they say there's nothing we can do about it. So the foundation of a major part of the law is already put in question, and then they just generally oppose most of what the government is doing. And then there's a second party that's the Free Democrats. That's market liberal, I would say, and they oppose it mainly for budgetary concerns, that it could reduce returns and then affect budgets in the future. And then there was also in the parliamentary debates, there were also specific discussions, not around the law as a whole, pro or con in the entire law, but with regards to specific rules in the law. So one was green genetic engineering, where there's a debate around whether that's still a sustainability risk, like Monsanto and its main product that really makes also farmers dependent and so on. That certainly is seen critically, and the new technologies that might actually add to sustainability. So there was a really intense debate on that. There were debates around fossil gas because, as you might know, we now built LNG terminals because we had to, substitute Russian gas in Germany, and at the same time, the law has a exclusion for companies with more than 50% turnover from fossil gas, and that were the kind of specific discussions that were going on. So, if you ask me, compared to the debate in the United States, the regional debate was still more a factual debate that you can also engage as someone that's involved in the topics, because politicians actually were debating relevant aspects. If you discuss about return effects or impact or certain technologies, all these debates are valid in my eyes, and I think it's good that they take place in Parliament. And especially because in this case, the asset owner is the state. The Parliament also, in the end, is the institution that has to decide on certain value judgments. So I think it's good that debate is taking place, and it's also normal that there are differences of opinion and judgment on these specific issues. What we don't have so far is this kind of camp building, that ESG is either bad or good, that I observe in the United States, and I hope we never get there, because it's pretty much everyone that's in the finance sector knows that a part of ESG analysis is just good investing. And then there's the question, what goes beyond that, whether an investor wants to go beyond things that really affect cash flow projections in the end for stocks or and companies or not, and there it becomes a value debate, but to just put it in two camps just is not really giving justice to the topic.
Well, thank you very much for that explanation. Obviously, there's a much broader dialogue going on than most investors and or even financial advisors in the U.S. are aware of within the states of a country like Germany, for example, and that's really helpful for you to clarify that for us. Now, you've also been integral in launching a green bond program for the state of Baden-Wurttemberg in 2021. What was the rationale for the state government to issue green bonds, and how is that program going?
Thank you for that question. Basically, now I'm changing sides from being an investor to being an issuer, and we actually started on the issuing side to look more into the sustainable finance market. And for us as an issuer, the green bond was just a very good tool to showcase to the global capital markets what they are buying if they invest in a sovereign bond, or in our case, a SSA bond of the state of Baden-Württemberg. Because we were always convinced internally that the activities of a state, especially the state of Baden-Württemberg, are very much oriented towards sustainability, that there's very many environmental aspects we're investing in as a state, but also social aspects like education and the like. And so there should always have been interest in any from sustainable investors in our bonds. But as always in markets, you also have to have some way to communicate that. And we decided to use a green bond to do that, and to broaden our investor base, but also to be a showcase maybe for other regional governments or regional companies to also think about green bonds, and also as an internal steering mechanism, because the green bonds has quite high standards for projects to qualify for it internally. So it also gives a feedback into the organization to care more about impact evaluation, for example.
So now, Arnim, how has the green bond program been received by investors at this point, both within the state of Baden-Württemberg and elsewhere in the world?
So far, I can say we're quite happy. We started with a sub-benchmark size of 300 million in the first bond. Then we had one with 350, and this year in June we're benchmark size for the first time with 600 million. The size basically is linked to the amount of projects and expenditures that we can identify and document on this high standard. So that shows that we have a development also on the expenditure side. And the demand was good in all three issuances. In the last one, really, it surpassed any expectations. We had 8 times more demand than we had issued. We had 125, I think, investors in the book. It was a very international book, which for us as a regional issuer was, a big improvement. Historically, we had a lot of, quite German investors, maybe some Austrian, and now we really covered international investors. We had American investors, we had Middle East investors, and we had a lot of EU investors from Scandinavia, from Netherlands, and so on. So that was very good market feedback, and it enabled us also to reach financially attractive terms in all these issuances.
That's terrific. So, very briefly, how was the pricing affected by that, by the greater demand than you actually had bonds to issue?
Yeah, you might have heard of the term greenium for green bonds, and there's a lot of research on that. And of course, we try to identify that. Also, in our case, usually we had 1 to 2 basis points greenium, so we could price 1 to 2 basis points tighter than we usually could in a bond issuance of a similar size. Of course, in our case, it's not a clear-cut comparison because you can only compare to secondary market curves. Germany issues green bonds and always has a twin as a conventional bond, so they can prove the greenium every time. In our case, it's based on secondary market estimates but based on that, we had 1 to 2 basis points advantage.
I see. Well, Arnim, thanks so much for your time today. We really appreciate you spending a moment with us to help us clarify for our investors and advisors here in the U.S. how these programs are working in the EU, and especially in your case in Germany. Where online can listeners find more information about the federal state of Baden-Württemberg's capital market and pension portfolios, and how can they get in touch with you regarding questions that they have about the topics that we've discussed in today's episode?
So getting in touch with me is easy in times of social media. Just find me on LinkedIn, and I answer to any contact requests and messages I receive there. And regarding the Green Bond program, there's a specific site, green-bond-b.w.de, greenbondbaden-württemberg.de, and there's all the information that investors need, Green Bond Framework, investor presentation, and so on. On the pension side, we have some German information online, but I would rather refer to LinkedIn if there are questions regarding that.
Terrific. Okay. Well, thanks again to Arnim Emrich, Head of Treasury for the federal state of Baden-Württemberg in Germany. And for our listeners, if you're ready to take your team to the next level, or if you're an experienced sustainability professional, visit the ACRE website to get in touch. With the right individuals leading the way in your company, sustainability becomes more than a buzzword. Let ACRE enable real change by embedding and developing purpose-driven people in your teams. And to our followers, join us again next week for another episode. I'm Paul Ellis, and this is the Sustainable Finance Podcast.